what I then found out is when we built a liquidity formula for GMI, myself and Julian Bittle, and we found that according to our measures of liquidity, the NASDAQ, the S&P, all of these things, let's use the NASDAQ, 97% correlated with liquidity, particularly the central bank balance sheet, because it's the denominator. And we can then forecast into the future by using a lot of the work that we do in GMI, where liquidity is going to go. We also know what the central banks are going to do because they monetize their debt 3.5 years later. So we can actually build out models into the future where we think liquidity goes. And if assets are 97% correlated, we can forecast assets out into the future as well, which is what makes it an everything code. Now, it's a hypothesis, a thesis, needs to be tested. It's very bullish on assets going forwards because we're in the point in the cycle where economic growth is falling, inflation is falling, unemployment will start rising. And at that point, you tend to get stimulus over time. And we've seen the central bank balance sheets. The Fed used theirs for the banks. We saw Japan with the yield curve control, the UK bailing out its pension system. So bit by bit, we're starting to see the return of the debasement. And over time, it should accelerate at this point in the cycle. And that gives us a very good backdrop to assets, particularly crypto, which is the fastest horse in the race.
Macroeconomic investor and founder of Real Vision, Raoul Pal, believes he has cracked the code and is able to successfully forecast asset prices months out. This is his thesis he has dubbed the Everything Code. Raoul believes that what governs all asset prices is actually a multi-year liquidity cycle and the government payment of its debt, causing a ceiling on interest rates. Within his latest livestream, Ask Me Anything, Raoul breaks down the perplexing relationship between the S&P 500 and the rate of M2 expansion, highlighting an astonishing correlation which indicates that asset prices haven't really gone up, but rather it's the devaluation of the currency that's happening. This eye-opening analysis is part of Raoul's groundbreaking thesis, where he changes the denominator for all assets to the global central bank balance sheets, giving a completely different perspective on market movements. Under this new framework, essentially all assets, stocks, bonds, real estate, gold, and silver have remained completely stagnant with no real growth. However, Raoul points out two shining stars: technology and crypto. He believes that these sectors not only keep pace with debasement, but outperform due to their tie to technological adoption driven by laws like Metcalfe's and Reed's law. And here's where it gets truly thrilling. Raoul is convinced that we are on the precipice of the fastest rate of change in technological advancement in all of human history, which he believes will supercharge crypto and exponential technology like AI and robots. Make sure to stick around to the end of the video where Raoul reveals his insights and game plan for the upcoming bull run and why he thinks the Everything Code is the key to unlocking unprecedented wealth in the exponential age. Also, only a small percentage of my viewers are actually subscribed. If you enjoy finance content, consider subscribing or liking the video. It's free and you can always change your mind.
So what that means, because people are like, okay, I don't really understand what it means. What it means is you've got no wealthier by owning the S&P 500, even though it's gone up.
Right.
So what an asset is future deferred consumption. You buy an asset to maintain value so you can do something with it. Now, the S&P's done a good job at offsetting debasement, but it hasn't gone up. So you haven't actually got richer, you've maintained the same. Real estate is the little bit confusing. Well, gold, let's deal with gold. Gold has done a terrible job in all of this, which was surprising to me. I thought it would have done better. Right. Real estate does underperform, but don't forget, most real estate uses leverage, so it actually probably ends up a bit better. So it probably looks more like the S&P. But none of these things have added to your wealth. The only things that have added to your actual wealth, i.e. your ability to buy more in the future of other assets or whatever, is technology and crypto. So here's the other issue, right? Is debasement of currency, fiat currency, optically pushes asset prices up. The issue is income is not correlated to the balance sheet. It's a variable. The others are scarcer supply assets. So variable assets are not correlated. So what you found that is in real terms, wages haven't gone up since 1972. So nobody can afford assets because they keep getting debased, which is why the rich get richer because they own assets and the poor don't because they don't have assets. And this is part of the thesis that got me into crypto, because here is a new asset that is basically fractionized. So everybody can put in a percentage of their net worth and participate. And it's a faster growing asset, so it gives you a chance. Remember back a long time ago, I did that big video about demographics that has millions of views on YouTube. Part of that thesis was you need to own something like crypto because it's got a right tail. It has a potential to generate higher returns because people are so in the hole from their real wages never going up. And they're so in the hole that they've just borrowed money endlessly. And so that's a horrible situation where you don't own assets and you just have more debt. Because in the end, your house isn't much of an asset because you need to live somewhere. So, okay, I've set up the problem set, which is that we're all fucked. Our wages don't go up in real time. People can't afford many assets. We now know what drives the assets, but the issue is here. It's being driven by this printing of money to pay the interest. How do we get out of that? Because you're never going to go into the big debt jubilee default. That happened in 2008. The debt jubilee was setting all interest rates to zero. And people are expecting the calamitous crash, but it won't happen. It just keeps debasing. And like the Venezuelan stock market, the stock market keeps rising because you're debasing the currency. So how the hell do you get out of this trap? And this was part of that How to Unfuck the Future piece that I did for Real Vision. The answer is you need to increase productivity. That's the only way, because you can't change demographics and debt hit its limits in terms of interest payments.
Magic formula.
Yeah. So how do you change productivity? That's the exponential age. You know, that's the mass adoption of crypto rails for retooling the entire financial system, make it more efficient, faster, fairer. It's the adoption of AI technology to extend the power of human beings. It is the use of alternative energy sources to drive productivity growth, because productivity really, all technology is basically trying to drive productivity from the same unit of energy. Now, energy, if I look at the inflation adjusted chart of oil for the last 60 years, is $40. Doesn't move. Even with the shale revolution, didn't really move because China came on, you know, we had different demand structure. Now, technology keeps driving productivity growth, but it's not having a big enough difference yet. The real answer is to lower the price of energy. And that comes by spending a lot of money on building out new sources of energy, whether it's nuclear, whether it's green energy, where you collapse the cost of energy. And if you collapse the cost of energy to $10, you've got a massive multiplier effect on productivity. Then with the growth of technology from robotics, AI, genetic sciences, cryptocurrencies, distributed computing, quantum computing, all of these things, Internet of Things, self-driving cars, all of this creates a technological revolution of which mankind has never lived through. I think people are starting to get their heads around it. When I first started talking about the exponential age about 2 years ago, everyone thought I was a moron. And now they saw AI and they realize, holy shit, within 2 years, Tesla's cars will be self-driving and Waymo and all of this. And your Uber won't have somebody in it. You know, that's 2, 3, 4 years away. We've got quantum computing moving very fast. We had a piece on Real Vision about it recently. Okay, that's going to happen. That changes everything. We're seeing chip technology improvements. We're seeing distributed computing power improvement. Everything is going crazy right now, and it's only going to go more so. Over in Europe, they're accelerating this. I think, again, the central banks and the governments actually understand what the game is, and Europe has played the card much like the New Deal card from the US, which was we are going to force the cost of energy down by injecting huge amounts of capital into the green revolution in Europe. That wins for them because they create new job opportunities. It wins for them because they lower the cost of energy. And it wins for them because they lower their resilience on other nation states who own the energy. You might take some short-term pain, you might not. We don't know yet. A lot of people, skeptics, will say, well, everyone's going to get screwed with higher energy prices in Europe until they sort this out. Let's see. But anyway, there's a big thing. There's some really big things going on. So we've got a technological revolution that could provide the answer to the productivity issue. The other part of it will be demographics as the baby boomers leave the workforce. So what I'm thinking is we will drive up GDP growth and we will lower the number of people in populations. The net result is a higher per capita income, which we've seen in Japan and other countries. And I think we can accelerate that process so people get richer. Now, there is other issues about will jobs be replaced? How do we replace that? That's one step at a time. So I'm actually very optimistic, firstly about asset prices. Because of this issue of debasement, we can make money from it, and we know which assets rise more, crypto technology. So that's going to help us unfuck our future. And this productivity miracle is where the answer is going to lie. So, I'm very much in line with Neil Howe's fourth turning. I think this is a fourth turning moment. I think what is going on is of an order of magnitude the largest technological change mankind has ever seen in the shortest period of time. And it's amazing to be alive in a period like this.
So there's Raoul Pal and his everything code. He believes he's cracked it, finding the relationship between asset prices and liquidity cycles, and spotted the almost perfect correlation of currency devaluation and essentially every traditional asset's price. The revelations that technology and crypto are the vanguard, outpacing monetary debasement and harboring colossal potential, gives investors a new beacon of hope. The race is on, and according to Raoul, it's a bull run like no other we're about to witness, propelled by the rapid technological advancements at hand. Now is the time to reflect on the insight shared by Raoul Pal today. Will you be part of the exponential age and harness the tremendous opportunities it brings? As the saying goes, fortune favors the bold. Before you go, if this video has invigorated your financial senses and your thirst for more, please consider hitting that subscribe button and giving this video a like. Let's keep this community growing and thriving. Thank you for watching, and may your investments be guided by wisdom and foresight in this era of boundless possibilities. Until next time, stay curious and stay invested.